Well, many mortgage borrowers at the end of their latest rate cycle may be in for a bit of a shock as they come up for renewal, with the reality that rates, according to some experts, could remain elevated well into next year. So to break it all down, we're joined live by mortgage broker at lowestrates.ca expert Leah Zlatkin. Leah, thank you for joining us again this morning. Good to see you.
Good to see you too.
Maybe you're not delivering the news we want to hear. You know, we're hearing and you're expecting potentially that interest rates could remain high into next year. What's the thought behind that?
So in terms of the variable rates, we are still seeing them elevated right now. Obviously, when we look at the CPI numbers, we're at 3.3%, which is higher than we were anticipating. So this is basically proving that inflation is remaining high. And so at this point in time, with inflation high, the best way to combat that is for the Bank of Canada to remain high in terms of the variable rates. I'm expecting that we are probably still going to see a hike before March of next year. And then we hope that things are going to start coming down over the next 4 years. But if you do have a variable rate mortgage, it's likely to remain elevated for a little while.
What's the advice then you give to clients in a situation like this, where a lot of people were going variable even just a year ago, thinking, oh, I'm getting a better deal, I'm doing okay, and then they've seen the rates jump, 7-8 times depending on sort of when you started here. What are you advising your clients at this point about, like, if your mortgage is coming up? What's the sort of best advice right now?
Yeah, absolutely. If your mortgage is coming up for renewal, it might be the right time to consider a 3 or a 4 year fixed. If you currently have a variable rate mortgage and you're able to make those payments and you're okay and you've got a big penalty to break that mortgage, I would recommend remaining if you can afford it. If you feel that payment pain, definitely talk to a broker or your bank and start considering making a move. But in terms of first-time home buyers or people who are new entrants to the market, I mean, this bodes very well for them. With the real estate market where it sits right now, a lot of people with concern for interest rates are not buying as readily as they were before. So we're seeing increased listings, we're seeing decreased sales. So in terms of the actual price of homes, we saw a drop of 5.7%. And in terms of the number of homes moving around, we saw 8.8% decrease month over month. And so for a new buyer or somebody looking to get into the market, this is actually a great opportunity to strike, as long as you can withhold those high interest rates or you've been pre-approved.
Yeah, and about the stress test too, because the stress test brings you in at even a higher rate too, right?
Yeah, it does. It makes it a little bit harder to qualify, but if you're a good candidate who's getting qualified at a higher number, great for you. Otherwise, I mean, you can really take advantage of the fact that it's becoming a buyer's market.
When it comes to qualifying, that's an interesting thing. You know, when you go out shopping, you should kind of know what you can actually afford and what the bank's going to be willing to lend you to, right?
100%. You should absolutely get pre-approved or know what you qualify for before going shopping with your realtor. You don't want to see the perfect property and realize it's out of reach.
Exactly. So what's the general time frame that you can kind of get pre-approved for at this point? Has it changed at all with interest rates going up? I know in some cases you can maybe lock in, was it 180 days or something like that?
Yeah, so some lenders will do longer pre-approvals. Most lenders stick at 120 days.
Okay, 120. All right. And so when we're getting into this cycle here, and like you said, maybe it's turning into a bit of a buyer's market, you still got to get that down payment in some cases. And so there's so many factors that people need to consider, aren't there, before they, like you said, go out shopping with a real estate agent? Yeah,
absolutely. I mean, if you're buying under $1 million, you can certainly put down less than 20%. If you're looking at over $1 million, you want to have that 20% down, and certainly recommend talking to a broker or your bank to figure out exactly what kind of mortgage you qualify for today based on today's numbers.
Yeah, and what are today's numbers? Like, what's the sort of typical posted rate right now for like you were talking a 3 or 4 year fixed rate?
Yeah, so in terms of our 3-year rates, those are a little bit more expensive. In terms of 5-year rates, you're seeing 5-year rates just below 6%, depending on what you're buying. You might even find rates as low as mid-5s.
Right, but it's going to be a while, as you're suggesting that, you know, the rates could remain steady through 2024. If it goes beyond 2024 into 25, that would surprise you then if the rates continue to stay that high?
I do think that rates are going to start coming down. I mean, they have to start coming down eventually. I think the challenge right now is maintaining a position of firmness for the Bank of Canada while inflation remains high. Unless we can get inflation under control, the Bank of Canada needs to maintain their position.
Yeah. What's it like for you when you see these days when the inflation numbers come in or the jobs numbers come in? What kind of goes through your mind on those mornings when you see, you know, CPI, et cetera?
When I saw the last CPI report, I was thinking to myself, man, I wish people would just stay home and stop going to the mall, stop shopping. But I mean, a lot of that, the headline inflation has to do with food prices and gas is at a 12-month high. So there's a lot that's sort of out of our control as consumers, but from a consumer perspective, I certainly hope that people start becoming a little bit more fiscally responsible. If you don't have the money, don't go spend it.
Yeah, that's good advice pretty much all the time, but particularly in the environment we're in right now. Leah Zlatkin from lowestrates.ca. Always appreciate the time. Thanks for being here this morning.
Thank you so much for having me.